I think for anybody, it's really important to have a budget. Times like this shows how they're more important, just because everybody's looking at where their money's coming from. If they've lost their job, they're on unemployment. So creating a budget, times like this, makes it a lot more beneficial. So generally with the budget, you're looking at, how much money you're bringing in after taxes and what all your expenses are each month. And once you start going down through there, hopefully you have more money left at the end of the month than what you're bringing in. And if not, you have to start going through your budget and determining your needs and wants. That's usually a good way to look at it. A lot of people feel that they need cable TV, they need NFL Network, they need HBO and all the different things that really increases their bills significantly, which I consider those more wants. A cell phone these days, I consider that virtually a need as opposed to a want. Your utilities, your house payment, your rent, all those things. So looking at all that stuff and trying to determine, is there any places that you can go in and adjust your budget, get rid of expenses to free up some money. So that's kind of a high level of looking at a budget. And, you try to break everything down on a monthly basis.
Let's start with that. So let's assume two different scenarios. First is somebody is still working and they have income, and let's assume somebody who maybe is laid off and is living off of savings, right? They have a little bit of money set aside and they're trying to figure out how to make that money last them the longest. But let's start with somebody who maybe is still employed but has questions about the longevity of their employment, whether they're going to be employed in 2 weeks or 3 weeks, and they're nervous about that. And if somebody has a certain amount of income, how you break down that budget and what's included in it and that net figure that you're left with.
Yeah, so that's what their normal paychecks are averaging. I usually try to use their normal wages, not extra hours overtime where they get time and a half, because those are not guaranteed. So you try to figure that part of it out and live off of those numbers. The other thing is retaining cash if you are able to. You want to be sitting on money in case you do lose your job. If you have it now and you are losing it and it takes a couple of weeks for unemployment to kick in, I'm seeing that happen quite a bit. People aren't able to get it right away, so they have to pay bills. So having some cash reserve is definitely key.
Yeah, and I think that something that helped me, so I think nobody is immune from having to go back and review their budget, especially during these times. I've gone back through, and something that helped me, because admittedly, times have been good over the last couple of years, and I don't think that all of us have had the need to go down with a microscope into our budget. So I actually had to go back and look at my full 30 days of bank account history and figure out what was coming out. Because not all of these things that I'm spending money on are regular recurring monthly expenses like we think of: electric, gas, water, sewer, mortgage. Some of them are subscriptions to things that I've signed up for, like Apple iTunes or YouTube or other things, right? So if you understand the concept of budgeting and okay, I know what my electric and my gas and everything else is, right? Then if you really want to get in with a microscope, you go to your 30 days of activity on your bank account and you take the time to analyze everything that's coming out. But you're not done there, because a lot of us don't use our bank account anymore for automatic deductions, right? We've got our credit cards that we use. Go to your credit card statements, look back 30 days, figure out what's coming out of your credit cards as well. And for me, I signed up for a couple of subscriptions 4 or 5 months ago that I didn't even know were still being charged. And so I had to go back, and I would not have known had I not gone back and done this budget analysis and confirmed what was being charged to my credit cards. And so on a high level, when you're looking at your budget, you think of your normal utilities and recurring monthly expenses, but on a microscopic level, you really want to get in and look at every single dollar that you've spent on your regular monthly account, your checking account, your credit card accounts, etc. Steve, do you have any apps or tools or resources that you recommend to people to take a look at their credit cards and their spending? Or is that just something that you say go in and actually pull the statements yourself?
You know, a lot of times what I have people do is start doing their budgets going forward. Like if you start beginning of April, track every expense, every dollar that you come in and every dollar going out, and see where you're spending your money on. Because a lot of times, I mean, when I do a budget for somebody, we look and they should have a lot of money left over at the end of the month. And I ask them, okay, do you have this dollar amount? And they're like, well, no. And they don't know where it goes. So they start tracking it. And because a lot of times they'll get cash out from an ATM machine. They'll get cash out if they cash a paycheck. They'll use their credit card, have multiple credit cards. So sometimes it's hard to track all the different things. But if you get an old-fashioned pen and paper out and you just start writing down, all right, here's what I'm spending my money on today, and keeping track of your receipts, then you really have a good idea on where that money is going by the
Yeah.
end of the month.
Yeah,
And
I
that's
also think
truly the best way.
I think hold on just a minute. I'm getting a comment from somebody that they're not getting any sound. I will try to share with her the link. I personally, on an app side, right? So I did the pen and paper years ago when I first started. On the app side, I use Personal Cap. Personal Cap allows you to input your assets as well as your expenses. So you can log into your online banking if you do anything from your banking, or you can log into your credit cards. And it will categorize your expenses for you. There's also money. There's a few different apps that you can use that will help you go back through your history of expenses. Now, Steve, you said something like, all right, so we start with April 1. If somebody was laid off 2 weeks ago, where they are now going forward it may not be a good accurate indication of what their budget is, right?
Correct.
So if that's the case, what would you recommend?
You can still go through and come up with all your essential expenses that you're going to have on a recurring basis. I mean, you're going to have your electric probably every month, your cell phone, your gas, if you have rent, mortgage payment, all of those things, those are going to continue. So you can get the bulk of what you're spending money on just by looking through your checkbook, I would.
Yeah. Okay. And I think that's the same thing with me. Like what I did is I went back about 90 days. And on 90 days, we went back and just saw, because some of these things only bill once a quarter. So if you only look at your current month, you might not catch something that's going to come out here in April because it's quarterly billing. And as a result of that, it's a challenge to go from here forward. So let's talk now. So we've gone through budgeting and we've gone through making sure that we understand the budget side of things, right? We've made sure that not just the utilities, but also what's coming out of your bank account and what's being charged to your credit cards. Can you go over what potential items, how can somebody handle if their budget's under pressure? What steps can they take to help?
So, the big thing is looking at where your major expenses are. If it's your mortgage payment, I know there's some relief out there. A lot of banks or mortgage companies, you're able to call them and work out a deal with them to delay your mortgage payment. And that's usually the biggest expense that somebody has. I think the same thing with rent. You're able to talk to your landlord and ask them if they can work out some kind of arrangement for you on paying your rent. As for like credit cards, I would be paying your minimum payments on them just because they do have high interest rates. I wouldn't be paying a lot extra on them. Try to preserve the cash that you have. So those would be the things that I would be looking at this point in time to try to reduce how much money is going out every month and trying to keep that cash set aside for emergencies that may come up during these times.
Sorry about that. I was muted. So on my end, I think that what I have seen and what I noticed is that some of my utility bills were not yet on a budget. And getting those bills on a budget was very helpful, right? So you might have a gas bill that's a little bit more expensive as you go through the winter months, and then you come into summer and that gas bill gets a little bit less expensive. But then conversely, your electric bill might get more expensive in the summer, right? So if these bills are not on a budget, the first thing I would do is consider calling the electric company and calling the gas company and seeing if it's possible to get those things on a budget. That may reduce those or make them more consistent, because I think that the inconsistency of those bills can sometimes lead to financial hardship, right? And having those bills be one fixed payment every single month that never changes is a very big deal. So for me, having that budgeting set aside for your utility bills is a very helpful step. Something else that occurred to me when I was looking through my budget was making sure that you do reach out to your credit card companies. And if you're in financial hardship, ask them if you can get a lower interest rate. The market rate is very low. If your credit score is better now than it was when you applied for the credit card, you're not asking for a higher credit limit. You're asking to see if they can reduce the interest rate on your credit card. Depending on the credit card company, they may or may not go with that option. And also depending on how much you owe, getting that reduced balance, or excuse me, that reduced interest rate would definitely have an impact on the monthly payment.
With that being said, William, you talked about credit cards, what your credit score is. That's something important to pay attention to also. A lot of people do not pay attention to it. I know right now a lot of credit cards offer you what your free FICO score is every month when you look at your credit card. But you can go to places like Credit Karma and look at all of your open accounts in there. I would recommend doing that and trying to improve your credit score, because, directly with your loans, the higher credit score you have, the better rates you're going to get on loans. And it's the same thing with your credit card. So I would be looking at what your credit score is and trying to find ways to improve it. If you have a bunch of credit cards out there that you opened up just for the discount when you opened them and you haven't used them for 5 years or 10 years, I would close them. Start eliminating some of that so you don't have a lot of open debt out there. If you have some that you've been using for a long, you have a nice history on, you want to keep those open, even if you're not using them anymore, just because it gives you some history that helps your credit score. So I think that's very important to pay attention to, because it could save you quite a bit of money on interest rates.
Yeah, and in financial hard times, right, you might say, well, I don't have the money to worry about those things now. If you're in a position where your credit score is okay, so we've talked about calling your utility companies and getting on a budget, seeing if you can get the interest rate on your current credit cards lowered. Another option is, of course, trying to get a 0% APR balance transfer on a different credit card, or calling a credit card that you might have a zero balance on and making sure that maybe you're taking advantage of that zero balance transfer from another card that doesn't have an interest rate. Again, ways to cut your budget, ways to reduce how much you have to spend for the next 30, 60, 90 days. That's primarily what we're looking at. I want to hit a little bit on the forbearance piece. I don't want to go too deep into it. So the federal government has indicated that if you're facing financial hardship, you can call your servicer and not make your mortgage payment. And you can do that for at least 6 months. What I'd like to say as somebody in the mortgage industry, that this could potentially be catastrophic to your future finances. While it is an option now, that option that you're taking advantage of now may allow you to make it through hard times. And if that's the case, then you should take advantage of it. But if it is at all possible for you to continue to make that monthly mortgage payment, I would very strongly advise it, because it is not forgiveness. That amount that you are not paying is going to have to be paid at some point in time in the future. You have to get with your servicer to figure out what your options for repayment are. I have seen instances where you come out of this forbearance period, 6 months. Let's say your mortgage payment's $1,000 a month. After 6 months, you're $6,000 behind. On month 7, you owe them $7,000. And they're going to send you a bill for $7,000. And this is where your future financial issues could come to roost, right? So talk to your servicer. I don't want to get any further into that. I just want to say that forbearance should be a last resort. That money is not going to be forgiven. It is money that you will have to pay back eventually. If you're live and you have questions for us, go ahead and drop them in the comment box. Me and Steve will be happy to go through those with you. Again, quick recap, getting your recurring monthly utilities on a budget, if they're not on a budget, could reduce those costs. Calling your credit cards to see if you can either get a 0% APR, reduced APR, or do a balance transfer to another card that'll give you a 0% APR, and communicating with your servicer about entering forbearance on your monthly budget. Steve, when you talk about budgeting and setting money aside, what's the general rule of thumb? How much money should we have either in cash or in the bank as a safety net?
Generally 6 months of expenses.
And when you say 6 months of expenses, this is after you've taken the steps to go through your electric, your gas, your utilities, your subscriptions, your Netflix, your cable, your everything. Add that total number up and just multiply it by 6. Am I hearing that right?
Yeah. So if my normal expenses were $2,000 a month, I would want to have $12,000 of money set aside in a savings account or money market account that I could access in case something happened. Times like this, you lost your job, anything that you would be able to pay all of your bills.
When you're entering into hard times like this and you have $8,000 in credit card debt, but you also have $10,000 in the bank, and that credit card maybe is costing you $210 a month in a minimum monthly payment, would you advise someone to take that money and pay off that credit card to save that $200 a month?
No, I would not. I would keep the money in a savings account, keep paying the minimal amount on it. That way you have the money. I've seen it happen before. People will do something like that, and then an emergency comes up, their furnace goes, their car breaks down. They got to come up with a couple $1,000s to get something repaired. Well, where do they have to go? Back to their credit card. So I would look at doing the others, continue to pay the minimum payment on it, but look at the different steps like we talked about earlier and try to reduce your interest rate on your credit card. And, that could lower your payment and help you.
Yep. And again, if you don't have a grasp on your monthly budget, if you don't have a clue what is involved in your monthly budget beyond your utilities, go back to your bank statements, go back to your credit card statements, analyze your spending, download an app for your phone, have it go back through your 90 days worth of spending and categorize for you. I'll be honest and say I was very surprised how much money I was spending eating out when I downloaded one of these apps, and I was embarrassed to look at it and see how much I was spending on going out to dinner or buying lunch or getting a coffee or getting something, right? As those added up over a period of 30 days, then 90 days, then a whole year, it was a lot more money than you think when you're just spending that $1 or $2 a day. Steve, can you talk about that, about how you cut costs in these times to eliminate some of that spending?
Those are the biggest things that I see when I'm doing a budget. Food, eating out. Everybody thinks, okay, I'm only spending $1 or $2 to get a coffee every day or a latte or whatever they like. Well, by the time you add that up, if you do that for 20 days a month, multiply that times, the whole year, you had come up with a significant amount of money that you are spending. You could go buy coffee at home, make your own coffee, make your own lunch. I mean, a lot of people eat out at lunch every day. They spend $5 to $7 each time. Myself, I don't even eat out. I bring my own lunch from home.
You're pretty frugal, right? I mean, I know that about you to begin with. You are. So I was not, until I started seeing how much I was spending on lunch, and by downloading Personal Cap was the app that I used. And then I realized, oh man, I really have to do a better job of this. Okay.
Well, and I tell you, to speak on that is, I look at, I mean, I have a wide variety of clientele that I do all their investments for, their retirement planning for, and the people that have money are frugal. They do not go out and eat lunch all the time. They do not go buy coffee all the time. They don't have to have all the newest clothes, the newest cell phone out there. They don't do it. And that's the reason that they have money, that they can afford to do the things that they want to do, the extra things, and that they don't struggle in times like this as much as some other people. And you don't have to be rich. You don't have to make a ton of money. I mean, I see some people that they don't make much at all, and their first thing is that they're saving. First they're out of their paycheck, they put $100, $200 away into a savings account, and then they live off the rest. They're disciplined. So
Yep.
You don't have to make a ton of money to create emergency fund and to start saving for your retirement.
For us, what Abby and I have found to be very helpful is have a completely separate bank account that we do not see and do not log into where that money goes. It's automatically deducted from our paycheck. We have our normal money that goes into our checking account that we see and use. We have a completely another account that money that we're trying to build up that nest egg with goes into. And once every 5 or 6 months, we'll log into it and go, oh, okay, that's where that money went, right? And there's the safety net. Now, during these times of financial hardship, I want to remind people that eBay is an option. If you have items and you're really in crunch time and you need to get some money in your hands as soon as possible, eBay is alive and is thriving and is doing well. Most municipalities have a buy-sell trade site. In today's world, it's a little bit more difficult to do buy-sell trade because of the coronavirus. eBay, again, their activity has picked up dramatically as a result of that. If you're in financial hard times and you're in financial stress, there's no better time than the present to inventory your personal goods and see what you need and don't need to begin to get some money back through eBay or through other auction sites to help you afford your budget. Okay, I want to talk about stimulus. And excuse me if I read a little bit, I just want to give you some accurate information as I've been hearing it. So taxpayers will receive a one-time $1,200 payment that will either be mailed or automatically deposited into your bank account. And they will begin to be mailed April 9th, today. And so what I'm wanted to discuss with Steve is best practices for using this money. Now, obviously, depending on how much money you make, that stimulus amount is going to go down. If you filed your taxes online, you're going to get that money automatically deposited into your bank account. If you filed paper, they're going to send you a check in the mail. And as you earn more, you will get less and less until at some point in time, you will just simply get nothing because your income is such that they believe you should be able to afford your budget. So Steve, again, let's assume somebody is laid off. They have just paid their April bills and they're broke. They are waiting for unemployment to come in. They're waiting for this stimulus check. And this stimulus check is what's going to get them through these hard times. Talk a little bit about, again, best practices for use of this disbursement when they get it.
Yeah, so you want to, pay your major expenses, make sure you have food, things that you have to take care of. And then I would save a portion of it. I mean, if you can keep it as a little nest egg or emergency in case other things come up, that's smart to do. I wouldn't run out and say, all right, I got, I'm married, have a kid, so I got $2,900 that I'm going to go out and pay off all my credit cards with it and have no money left, or go apply it all towards my mortgage to get it down. I would not do that. I would, just pay the minimums on things that you have to right now, put the money aside. And then once you're back to work, you're getting your normal paychecks and stuff. If you have that stimulus money left, you can say, okay, I'm going to apply it at that point in time on my credit cards, or, add it to my mortgage or whatever you want to do with that money.
Yeah, my fearful opinion on this is that you've got to assess what you really need to live with that money. If this is all the money you have and it's all the money that you're going to have foreseeable, you start with the absolute necessities, the groceries and the budgeting for electric and gas and water and sewer going out at least 2 or 3 months. Then you fall back on your credit cards and your mortgage. Maybe you pay the minimums on the credit cards. Maybe if you're in this bad of a situation, you talk to your servicer about forbearance, or you talk to your landlord about rent. Um, but the important part is not exhausting all of this money the moment you get it. Not going to the store and spending it all and then spending your current month's bills and having nothing left and praying that next month something good happens. While you have that money in your bank account, before you spend it all, this is the time to have the conversation with your servicer about forbearance or the other suggestions that we've given you. Steve, I don't know if you know the answer to this. I'll ask you and then I'll tell you the research I did. Are you aware of whether or not the stimulus checks will impact individuals' tax refund?
Actually, what they are is a credit towards next year's taxes. So they should not affect your taxes, your refund. They're not going to reduce it next year. So just like you have the child tax credit, it would just be an increase on there. So people that do not get their monies now, when they file their taxes next year, they could get it back as a credit then.
So, but the key there is that you getting this money is not going to mean you get less of a refund next year. It's not going to impact your tax situation at all next year. It's truly money that they are providing to you as a result of the hardship they know that we are facing with coronavirus. Just a couple closing thoughts, and Steve, I'll have you wrap us up. You want to plan for, in my mind, at least 90 days. I think 90 days is very realistic given what we've been told. At least another 30 to 60 days. Virginia has been advised that they're closed until June 10. We're in a different situation than Virginia. Everything is very state and county specific at this point, but understanding that there are other areas of the nation that are being told June. It is April. You effectively have 2 more months worth of bills that need to be paid. Plan on 3. And if you're looking at your budget and you're projecting it out 90 days and you're going 3 months, this is what your expectation should be at a minimum, is having that 3 months sitting there. 6 months is optimal. If the stimulus check gets you to that point where you can do 3 months of groceries, electric, gas, water, sewer, but not your mortgage and not your credit card, it's time to make those phone calls today. Don't wait until it's June and you have no money to make those calls. My biggest fear is that people wait and they don't have money to support their family and have electric and gas. It's extremely important. One thing I forgot to mention is insurance. If you have automobile insurance, you should call your insurance agent. Allstate and State Farm are offering some sort of also a benefit of some sort to individuals who are facing financial hardship to pay their automobile insurance. This is another part of your monthly budget. If it didn't occur to you, reach out to your insurance agent also as a last little nugget there for you to potentially have some savings in your monthly budget. Steve, take us home.
One other thing that I'm running across a lot right now is with the markets being down as much as they are, so many people have 401ks at work. Now's a good time to go in there and look at what you're invested in and whether you need to rebalance or not. It's a really good time to do that. So that's something that, a lot of people don't pay attention to their 401ks. They put the money in there and they just let it sit till they get to retirement. But I would definitely look at that. I'm looking at a lot of people's right now, a lot of my clients going through them, saying, okay, hey, let's adjust things a little bit, growth's down, large growth's down. You maybe have some money in cash. It's a good buying opportunity. So that'd be the one thing I would definitely say, to take a look at your 401k and see whether there's some other options in there that may be better for you. When markets are down, you don't want to go to cash, especially if you have a long time till retirement. So I know some people get worried about that, and they think, okay, I'm going to go to cash and I'll get back in when things start going up. The philosophy is supposed to be buy low, sell high, not the other way of selling low and buying high. So I would stay invested, but just look and see if your allocations are correct.
Do you advise that 401k is a safety net? We have been told that we're allowed to take up to $100,000 of that 401k out at this point in time if we're facing financial hardships. Should it be a first resort, last resort? How would you guide people on the use of that 401k?
I would think that would be a last resort. The reason being is if you're under 59 and a half, they're waiving the 10% penalty on it, but it's still going to be counted as taxable income to you. So if you took out 10 grand, you're gonna have to pay taxes on that come next year. And then you're also affecting your retirement. I mean, that's what that money's set aside for. So I would not touch it unless you have to. I think a better option is if it was a last resort and you had loan privileges on your 401k, is to take a short loan on it that you're paying yourself back with whatever interest rate it is out of future payroll deductions. So I would look at that before I would look at doing a straight distribution.
So to say that again in very basic terms, if you take the money out, it's not free money necessarily. Yes, they're waiving the penalty, but you're going to have to pay taxes on that money. You better have a little bit of what you take out set aside to pay taxes on. And you may have it may be a better option to take a loan and repay yourself back what you've taken out instead of taking the outright withdrawal. Again, the 6-month rule is in play. If you're going to touch the 401k because you have no other options and this is your last resort, then touch what you need to get to that 6-month safety net. Steve, would you agree with that?
I wouldn't go that far. I mean, you could take different loans out on a 401k or different distributions from them. So I generally tell people, you know what, let's do 2 months, reevaluate. Because what happens is, people take out 6 months, they took out 5 grand, they go spend it on something. They sitting at home all the time, they need a new TV. So, they got the money in their bank account, they're going to go buy a new TV. So I try to limit it to a couple months at a time. That way you don't spend it on stuff you don't need, or you don't take out more than what you need.
Yeah, we're at a point where there's almost no such thing as disposable income right now. Every penny matters. Every dollar that you're saving and spending matters. If it means that you need to follow sort of a quasi Dave Ramsey method where you have a separate bank account that you're putting what you've budgeted for the next 3 months into, and leave yourself some great ideas for trying to have disposable money. And I hate to even use that term right now, but at the same time, you have to plan. I like your idea of doing 2 months at a time instead of 6. Thank you for that. Steve, any final thoughts on the budget and any final thoughts on the stimulus?
Yeah, I would, just to kind of wrap it up a little bit, is everybody has control of their own finances. And the more effort you put into it, the more you pay attention to it, you create a budget, you're going to be a lot farther ahead in the future. The stimulus money is the same thing as they did back in 2009 to help put money back into the economy. It's there. I would save that money as long as you can to get through these times. Once it's over, if you have that money left, then think of what makes the most sense for you to do. If you have high interest rate credit cards, look at putting it on that. Try to start with your highest interest rate stuff, get them paid off, work your way down. But I would not go out and just blow the money right now. I would try to save as much as I can, try to reduce our expenses. And in a couple months, hopefully this will be over. I think the economy will pick up pretty quick. It was strong before everything dropped because of the coronavirus. So you could see things picking back up here, hopefully in 2 months at the longest, maybe 3. And I think the economy is going to move forward pretty quickly.
Steve, we had a quick question about IRAs. Is there a waiving of any penalties for withdrawals from IRAs as well, to your knowledge?
Yeah, IRAs are the same as a 401k. 10% penalty is waived if you're under 59 and a half, but it still counts as taxable income.
Thank you, everybody, for joining us and for being a part of this. Thank you, Steve, for your time. I know, especially during these times, you're extremely busy. I appreciate you taking the time and sharing your knowledge. If you would like any of the information, Steve shared with me a budgeting tool that is a spreadsheet. I've got some resources that I have taken advantage of to learn about the stimulus and budgeting. If you want those references or want a referral of an app, Steve, what's the best way for people to get a hold of you if they want to ask some additional questions?
Yeah, probably call my office. Number's 330-337-7720. Or I have a website, baileyfinancialplanning.com.